For 20 years, some of America's most prominent economists and investors have been gathering in the backwoods of Maine to discuss the state of the economy. Now, with the world poised on the brink of another recession, this year's meeting has additional urgency and intensity. Economics editor Michael McKee is there now live from Lean's Lodge with the man who founded the gathering, Cumberland Advisors chairman David Kotok. Michael.
Thank you very much, Deirdre. And they have been coming here for 20 years, but the atmosphere a little different this year, David. You come here to fish and relax, but talk at dinner last night, not a lot of relaxation right now.
Not a lot of relaxation. You look at the events, the conversations up here are very intense. We've got multiple views, all kinds of ideas about how this is going to sort out. No consensus. It's quite a time. Who'd have thunk it when we planned a fishing trip and come up in the midst of this?
Well, this has to remind you a little bit of 2008, the month leading up to Lehman Brothers and the whole collapse of the global economy.
Yeah, you would think so, except that I think there's a different atmosphere now. In the meltdown in 2008, you didn't know what was happening. In this one, you do. You don't know how the outcome is going to be. You don't know what the policymakers are going to do to make a mess, except they're trying. But you have a better sense of where the economy is. Of course, the unemployment report could change everything here in a few hours. But this is not the meltdown. We have an idea of what the problems are. Now we got to solve them. That's harder.
Does it make it any easier then to be an investor in this atmosphere?
Well, I'm a terrified optimist. Because when you look at what's going on in markets, you say the markets are melting down, and the most recent metaphor is 2008. But as a practical matter, we have an economy in the U.S. with a very tepid recovery, but it's a recovery, not a shrink. We have policymakers who are not going to repeat the mistakes of 1937.
You think so?
I think so. They may make new ones, but they know the lesson from 1937. So you could argue that we're not going to have a liquidity crunch this time. You see actions going the other way. Now, what the Federal Reserve is going to do in Jackson Hole in a month is another matter.
Well, what are you doing right now? You look at what happened yesterday, 500 points down on the Dow. As an investor, are you pulling your money out and putting it in cash for the moment?
No, I am not. I think panic selling is a mistake. Unless you believe we're going into another depression or a recession. You believe we're going into a recession or a depression, the economy is going to go slump, and we're going to have a liquidity crisis and meltdowns and all that stuff. Yes, then sell everything and go hide somewhere. But if you don't, and I don't, then you can argue why this is a slowdown, not a recession. We had a supply chain interruption in Japan. It is running its course. By the fourth quarter of this year, it should have done so. We have gradual, slow growth in the United States. We are improving the job situation, too slowly, of course, but we're doing it, and that will continue. We have no inflation, very low interest rates, ample liquidity in the banking system. Look, we have negative interest rates in the Bank of New York.
Yeah, all right, that's the optimism part. What about the terrified part? You've got a lot of money at work. You've got the possibility of another big fall if we get a bad number at 8:30.
Well, I think the terrified part is appropriate. So you need to allocate your assets every which way you can, diversify worldwide, and be prepared to change the asset allocation.
But where do you go in this world?
Well, in this world today, I think you sit on cash and enter the stock market if you're not already in it. If you're a holder, you're a holder. You got to ride this through, but you don't panic and sell. And on the bond side, there is now a setup to begin the shortened duration because you sell bonds into frothy rallies and buy them when nobody wants them. And right now, we've got a frothy rally in treasuries.
What's it like being here, miles from anywhere, knowing that your money is at risk at 8:30?
Well, I'm here with a bunch of colleagues. Their money's at risk at 8:30 too. So we have good conversation. There's a lot of skills in this group, as you know, because you've been talking to them. And we have thoughtful debate. I think that helps. Thoughtful debate sharpens your focus. Then you've got to deal with issues and figure out the path that's best for you.
Scarlett was just talking about whether or not the markets are going to react, how the market's going to react to a better than expected or worse than expected number. Very quickly, what do you think happens today?
Well, my guess is non-farm payroll somewhere between 50 and 100,000, but that's a guess. The margin is wide. To depend on a number is a mistake on a single number.
David Kotok, thank you very much.